want to talk for a minute about Lululemon, LULU. This is a best idea short. We shorted this at 470. The stock on Wednesday broke down below 230 on accelerating volume, which was I don't know levels like levels, but that was an important day for me. Just watching this stock every day, the accelerating volume said a lot. I think what happened, actually, I know what happened. Someone got the literal internal memo that Lululemon was firing 150 people at corporate headquarters, which is something you don't do when business is going great. They mostly support jobs, but still, I mean, it's a cost cut. It's a cost cut because this company's in a really tough spot right now. This stock, I think, is still going to go to 125 to 150. So we're down about 50% on the short so far. And I think you got about another 40% ahead of you on the downside as earnings just melt down here. I've talked about this on the call in the past, but there's a very deep, long cyclical decline that the company's facing in its core leggings business, which accounts for about 46% of the company's operating cash flow. And then it's seeing really intense competition from Alo and Biore, as well as other companies that are literally opening stores on Lululemon's doorstep. So the management team talks about things like fashion misses and the tough retail environment, the tough consumer. Like, they never talked about this ever because they were in a 15-year upcycle in its core product with no competition or very little competition. And now they're seeing the exact opposite. So you have some cost cuts here, which is great for the short.
Yeah, this one, Brian, I think it's worth spending an extra minute or two on just from a signal perspective, because you called out what everyone should have. Like, if you're looking at a stock, if you're looking at a stock chart, you all have stock charts, right? Now, it's what's in your chart that matters a hell of a lot more than just having charts. Any certified monkey can have a chart. That's why we call them moving monkeys. It's a single factor model. It's not fractal. It's nor near fractal. It's one dimensional, never mind three. And a fractal isn't 3D either. It's a number that's not even a whole. Look it up. It's in the early look on that definition. But Lululemon, look at the volume, 2.5, 3 million shares a day throughout, so stock crashes, just to review, stock crashes after McGough made the sell call, goes to 247 in April. Then the volume bleeds out, trades 2.5, 3 million shares a day until they report reality in June. And then they have like a 18 million share day on the down day. So it's called accelerating volume and a down move in price, which would register inside of the algorithm because it's a price rate of change volume volatility signal that I built as, again, very bearish. And then the volume, from that period on is more like 5.5 million shares, the 10-day average. It's which is double the prior, like prior to the event, Brian. And then on Wednesday, which was a low volume day for the market in the aggregate, volume was like 20% higher than that on news that, is privileged news for some, but that you just discussed. So, and it's signaling lower lows, right? I mean, this is a very straightforward pattern that everybody should understand. This is indeed a fractal pattern. Don't forget that the price volume volatility signal is fractal. It's a fractal dimension. But this stock, Brian, I mean, in 2020, this thing was $138. In 2018, it was $113. I mean, it's not like 200 notwithstanding. I mean, those are a lot lower.
I don't master the fractal patterns as well as you just articulated. I understand that, but where my mind goes, it's to the P&L. And earnings are going to take it lower. People think that earnings just can't go any lower for this company. No, like with their earnings models, Keith, like the lowest they could put in a comp is 0. Like, people still don't appreciate that numbers could go negative. And they could go negative and they could stay there for a long time. And this company goes from comping flat to comping like down 5 or gross profit being down 10. That happens in a heartbeat. And that, in fact, could take this stock much, much lower, which is why it's still such a high idea for me.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.